Hey, what's happening, guys? Dan Dyro here with another options and play video update. So because we weren't going to get together until tomorrow for our option session, I wanted to make sure to get this video out ahead of the FOMC um, day tomorrow because this is something we would normally speak about, something we'd cover when we had our meeting on Monday, but because I had to push it out to Wednesday, I wanted to like walk through the setup and what's priced in and maybe things to look at. Okay, so what's interesting and kind of I guess kind of makes sense is that we're it's a pretty similar setup to actually what took place in March. So uh, the meeting the Wednesday of the meeting was this day right here. So it was the 16th of March. Okay, so you can see what the action was leading up to that, right? And then like just in the very immediate like few days before like the that that rate decision. So that's when the Fed first started to move rates higher, right? You had a significant washout on the Friday before, right? Some continuation after a choppy day on Monday. Then you had the start of a bounce on Tuesday, and then you had a gap go, and then just like a torrid run on the Wednesday, and then for the basically for the following 2 weeks, right? So now going into this meeting, you had a heavy down day on Friday, continuation on a choppy day on Monday, kind of a developing bounce on Tuesday, and now the question is, do we repeat that pattern? See like a significant rally with the Fed. Right now the expectations are for 50 basis point move. I think when I last checked, the FOMC futures were pricing in like a 99% chance of a 50 basis point tomorrow. So if that ends up coming out, or if that ends up playing out as expected, do we rally similar to what happened in March, right? So like that's the question. For the Qs, the 8 EMA is going to be the level. Okay, so that's the green line. Through the 8 EMA, things open up. There's a path probably to the 20-day, which is up in like the mid 330s. So um, again, very similar to what happened last Fed day, is that um, you had it blow through the 8 EMA on the morning of the Fed, and then it closed above the 20 on the afternoon, and then it took off to the races after. So if it can get through the 8 EMA, the 20-day comes next. That's the mid 330s, right? And then above that, you can see the 50-day kind of stands out in like the low 340s, which also kind of lines up nicely with like this huge level from April, and then again in March, and then again in January, right? Like this 340 area is like a big spot, and it was a big spot. Um, Now, in terms of like option pricing, and I'll go to the spiders in a second. Right now, you have, so for the Wednesday expiration straddle on the Qs, pricing in about 7.5 points. For Friday's expiration, so Thursday and Friday, so you get two extra trading days. It's pricing in 11. For next Friday, the 13th of May, it's pricing in 16.25. So not exactly half, but about 40-45% of next Friday, so the 13th of May, of that straddle, about 40 to 45% of the premium is tomorrow, right? So 750 for tomorrow, a little over 16 for Friday, which is seven full trading sessions after tomorrow's expiration. So you can see that a lot of the near term pricing on these contracts is and revolves around tomorrow. Uh, I'm hesitant to say that the options are overpriced because it's a big day. We've had some really sizable moves lately. Today, notwithstanding, interesting technical setup, and last Fed meeting we had a pretty major move. Top to bottom, our intraday trading range was 12 points. So, using that as kind of like a guide at 7.5, the options they're certainly not cheap, but they're also maybe not as expensive as they could be. Okay. Um, Spiders, similar setup, a little bit different, right? You can see that they still have some work to do just to get to the 8 EMA. That's up at 421 and a quarter. So that's a full 4 points from where they're at right now. So they still have some work to do just to get to the 8 EMA, and then if they do get through the 8 EMA, then the 20-day comes next. But again, there's still a little bit more work to do. because they're sitting a little bit further underneath it. Um, in terms of the straddle, Wednesday expiration 775, so that's very close to what the Qs are pricing in. For Friday expiration, so this Friday about 1125, and then for May 13th expiration, you're looking at about like 16 and a half points. Okay, so similar to the Qs, I mean, a lot of the straddle pricing for like out through the end of next week is built in is the tomorrow, right? So a lot of like the premium is built around like tomorrow's event. I mean, for both, the downside is still, it's still undetermined. I mean, we were at 52-week lows just yesterday. Not 52-week. We were at 2022 lows just yesterday. We bounced, but I mean, like neither look particularly strong. They've broken some big areas of support, right? They're below all near-term moving averages. So, if we do start to roll again, I mean, there could be a path to 400 on the spiders. There could be a path to 300 on the Qs. So the downside is a little bit less clear, but if the momentum picks up, I mean, there's definitely more room. I mean, you can see like we're still under a lot of big areas, and things are still kind of susceptible here. So, there's a lot that could play out tomorrow. I mean, I drew up a few scenarios of what to watch. You get the option pricing, kind of how you play it. Depends on like what you're looking for, what you're thinking. But it's going to be a busy day. It's going to be a session where a lot of people are really ultra focused on what the Fed has to say and what they do. Also, I mean, how the remainder of the afternoon goes after the policy statement comes out, right? I mean, where we finish and how people view that overnight. So there's a lot of moving pieces that start to fall into place after tomorrow. So, if you don't want the extra risk, there's nothing saying that like you have to take like a ton of size or a ton of options into the event. If you're not comfortable, then you can wait it out, and once there's a little bit more clarity on the direction and what comes next, then maybe you can like get back in and start to like look at stuff with more conviction. Versus tomorrow, I mean, there could be a lot of head fakes and a lot of chop and a lot of back and forth, and until we really figure out where we're heading from here. So just be sure to trade what you're comfortable with, and if the risk is too much, then maybe it's better to like size down or sit it out and wait for things to line up better. Okay. So if you like this video and you're looking for more information about trading options around events, please follow up with the link in the description of the video for more information on options in play. Hope you have a great night. Best of luck if you're playing anything tomorrow. Stay well, and I will talk to you all tomorrow.